Hi everyone, it's Monday, December 14, and I'm going to try to wake us all up after today. It seems the market these days tends to lurch at the oddest times and then just sort of do nothing ever after. So looking back at Thursday, we just sort of spent the entire day at about 1098. Friday we spent the entire day at like 1100, and today we spent the entire day at 1108. I mean, if you just zoom in, you can see just absolutely nothing. It's amazing that just over a year ago we'd have 20, 30, 40, 50 point swings, but things have really settled down. So I was struggling with what on earth am I going to talk about today because, the guest posters really aren't posting anything, and not that I'm not ungrateful, but it's just very infrequent, and not a lot dynamic going on in the market today. So I thought I'd just spend the time taking a look at the big indexes, just thumb through them, and say a few words about those that merit words. Not all of them do. And just sort of do this freeform like I usually do. So let's just kind of walk through this bit by bit. Starting off with the NASDAQ composite. As I've suggested earlier today, I'm still allowing for kind of a end-of-year hurrah, possibly. And in this instance, I'm looking kind of at the underbelly of this trend line here, which has a good amount of room left as the area for the bulls to play, as it were. As it is now, we've been stuck for some 3 months now inside this kind of 2,000 to 2,200 range, and we are looking at this 61.8% fib, but none of these things have really meant a whole heck of a lot. I mean, this Fibonacci down here offered pretty formidable resistance, and it was repelled, but then it cut right through it. So setting these aside like so, the simplest way to look at this is that this whole area of overhead resistance has meaning. It's worth heeding, and that's why I think the market's having more of a struggle right now, whereas in March, April, May, it just had turbo boosters on each side. So it's going to be a real drag for everybody. CRX, commodity related, same sort of thing here, just kind of sputtering out. You can see, huge move back, and smaller and smaller and smaller. It's sort of like a bouncing ball that's losing its energy. I think between the markets and the traders, we're all just kind of losing energy because it just doesn't have that kind of coiled spring that it did down here. So this is very representative of the market as a whole, just kind of petering out. And where someone like me is really struggling with is are we going to have another lurch higher, albeit on reduced energy, or does this represent the top and we start kind of easing our way back down? I wish I knew. I just don't. China, not a heck of a lot to say about here. Not all of these I'm going to have a lot to comment on. I mean, that's not tradable at this point as far as I'm concerned. Oil and gas, this is sort of kind of bullish. I mean, looking at this pattern right here, we've done a nice retracement. I can imagine this pattern being construed as somewhat bullish, which is why my first post this morning was about how OIH I thought was looking for some strength in the short term. Gold, after its just astonishing run, has softened and is sort of in a question mark popping up over the head zone right here. I would love to partake in precious metals after a more handsome retracement. As it is now, I consider it again in kind of the demilitarized zone, where I'd rather just not participate. The Dow, I believe today hit a new yearly high, if I'm not mistaken, on a closing basis. Yes, it appears to be that way. We are somewhat above that 50% retracement level. It didn't seem to pose much of a fight in terms of resistance. We're sort of just clinging to that zone right now, and we're just on the underside of this very pretty arc right here. But for a number of weeks, we've just been bouncing in this very tight range, not really knowing where to go next. As before, huge soar retrace, and then smaller and smaller and smaller until now it's just nobody knows which way it's going to go. Midcaps, bit of the same story. The fib on this one is 61.8 that we're beneath. The 50 didn't really do hardly anything. Technology, still on the underside of that big trend line. That trend line goes back a long way. How far back does that span? Back to 2004. So still just beneath there. Not surprisingly, the NASDAQ 100 looking very similar to that. Kind of hard to talk a lot about indexes that aren't doing a heck of a lot, but I'm trying here. Here's the OEX. Here's oil again. This is Russell 2000, and this, I guess, for me was sort of the bad news today, because in spite of the market not doing a whole heck of a lot, there was a lot of strength in the areas where I tend to be shortest, which is the small caps. The Russell and the small cap 600 both had over 1.5% gains today. And although we're still certainly beneath the yearly highs, unlike the Indu, this is threatening to burst above those former yearly highs. I still see that the bottom of this rectangle is being extremely substantial in terms of resistance. But if, as the Santa Claus effect sometimes or often does, strength rolls into the small caps, then we might see these guys take some leadership. Here's the SML that I mentioned earlier. Semiconductors, a few weeks ago, I really saw this as an important bellwether for the market as a whole, but they have gained strength here. I got out of SSG some weeks ago because I really lost faith in the ability of this to remain bearish. It's stuck in neutral at that horizontal line, but it's certainly not falling away as I had hoped it would from that line before. Here, of course, is the big one that everybody follows, the S&P 500. I tend to have simple charts, but this one probably looks like a mess to you. The familiar triad of resistance levels here that I mentioned this weekend, the 50% retracement, this channel, and these arcs, all kind of bearish barriers, which, if taken out, as I mentioned a few posts ago, I guess would clear the way to the 1225-ish type zone. Transports, another high for the year, it looks like, and starting to make some meaningful penetration into that green zone that I noted. The utils, I actually, this was a real favorite short of mine back here, and as it gained strength, I got out. I re-entered this again today. Not rock solid sure that this is going to work out, but it was at a high enough level that I felt comfortable re-shorting it. But as with all these other indexes, we're in sort of a mystery lane right here. The VIX has been around 20 for some weeks now, as there's a lot of complacency remaining in the market still. Here's gold again, nothing much to say there. This one is still pretty interesting, the broker-dealer index. Still, I think, very much a bearish pattern. We peaked for the year back in October and continue to ease downward. So that one is still pretty bearish. And the last one, XMI, the major market index, I would also say, although there's no absolutely clear pattern before us, that it's certainly not in any particularly bullish formation. So sorry to be so middle of the road here, but sometimes you can't be that dogmatic when things are like this. But this will probably wrap it up for me for the day. Glad everybody liked the new blog, and I'm going to end it here. So good night.